Hey guys, welcome back to another session of IC Markets webinar. Today we'll be covering a very interesting topic on trading psychology. Right, before we begin, right, I just want to check with you guys if everyone can hear me properly. Right, just now's a good session to now's a good time rather to practice typing into that question box. For those first timers who do not know how to use it, just you can try use it out now. Right, nice to see a lot of familiar names. Right, I see Nick here, I see Mario, Ifyani again, nice to see you, Pascal, Luca, Fabio. Right, okay, quite a number of familiar names here. Right, awesome. Hey Adam, nice to see you again, man. Nice to see you again. Okay, Joa, Michael. Okay, awesome. Everyone can hear me well. Everyone able to see me too because I have the webcam turned on today. Right, today I'm holding the webinar from the office. So the sound quality, video quality, everything should be clearer. Okay, nice to see you too, Mario. Right, I mean, I can't see you guys, but it's nice to see our familiar names again. Yeah, may the force be with me this time. Right. All right. Awesome. Awesome. Right, Toma. Toma, nice to see you again, man. Right, I have to reply you soon. I hope you went through the slides that I sent you. Kind of, I will see the messages that you sent me, and I'll get back to you soon. Oh, from Greece. Awesome, awesome. John's from Greece, man. Right. Always am very curious to know how many of you guys are tuning in from which countries. Right, can you guys let me know which countries are you tuning in from? Okay, we got Zulfika from South Africa. Julio, okay, Julio, nice to see you again from Germany. Okay, guys from Spain, South Africa, Ray from Singapore, awesome. I'm at Raffles Place now, if you know where if you know where this is. Well, quite a number of you guys from Australia, Thailand, Germany, Slovakia. Wow, Slovakia, UK, Finland. Oh, we got Ochuna from Uganda. Okay, Saisetra from Philippines, no, from Australia. Philippines, from India, Rajib from India, Kenya, awesome. Oh, Manchester, we got a guy from Manchester. So do you swing red or do you swing blue? From Earth, everyone knows you're from Earth, Francis. Okay, awesome stuff, man. Guys, today's session will be on trading psychology. It'll be a slightly different approach from our usual webinars where we're diving into charts. We're looking at all the different technical analysis, all the fundamental analysis. Today's session has been requested by many of you guys. Right, has been requested by many of you guys. It actually tackles the important questions like what is revenge trading? How can we overcome revenge trading? Right, this whole concept of trading psychology, is it very important? If I use a robot, if I use an EA to trade, do I need trading psychology? Right, so this has been a lot of questions that have been coming through. We've been focusing a lot on trading strategies, understanding Fibonacci, support and resistance, and we have not looked at trading psychology until now. So that's partly my fault, right? But today's session, we're finally going to tackle trading psychology. It'll be a fun session, right? It'll be very interactive. So what I want to encourage you guys to do, right? What I want to encourage you guys to do is to send your questions through, right? Along the way, I literally have another screen open here just to monitor your questions, okay? Because if you guys have been through my other webinars, you know that we usually don't run out of time by the end of our session and we don't have time to take the questions. So just send them through along the way so that, if it's relevant, I'll try my best to answer them, right? Yes, Nick, this is the secret sauce, right? I mean, I have a lot of secret sauces, right? Trading psychology is one of them, right? Tommy, I think no audio. I think everyone's able to hear me. Check your output, right? Check your output. Oh wow, Omar's tuning in at 5:30 a.m. I'm happy to have you here too. Thanks for the dedication to waking up so early to tune in for the webinar. Right, awesome. Okay, can hear you fine. Awesome, right? Okay, Jen, I will answer that question on scalping next. It's a very relevant question. Right, can hear you fine. The sound, Andre, I think the sound works. Right, I can confirm it works. Check your output. Oh, Saida, you're currently on the job. Maybe you can minimize me to a corner of your screen, yeah, so you don't see. Okay, awesome stuff, man. Thanks for tuning in, guys. Now, as usual, before we begin, we always have a disclaimer, right? Disclaimer, remember today's webinar is purely educational in nature, right? So always do your own little due diligence before you trade. Nothing in this webinar should be construed as investment or trading advice, right? So you know the usual drill, guys. Do your own due diligence before you trade. Now, this is our agenda for the day. Okay, this is our agenda for the day. We'll be looking at a couple of key things. One is trading psychology. What is trading psychology? A lot of people, right, think trading psychology is like some kind of kumbaya thing, like everyone sit down, they meditate, and you're in this state of mindfulness, right? And a lot, it's a very important subject, but there's not enough. I feel there's not enough proper explanations that goes into how you can practice proper trading psychology, which brings us to point 2 on why it is so important, right? Why is trading psychology so important? So the amazing thing is in trading, you can have the blueprint to a profitable trading strategy. I can give you the blueprint. I've given you guys the blueprint. I've shown you all the different methods I've used to trade, right? Fibonacci retracements, extensions, expansions, projections. We got supply and demand, we got indicators, we got oscillators, we got everything, right? But why is it when you trade, when you realize that a trade is reaching your take profit, or maybe it's reaching your stop loss, why does your heart beat faster? Why do you push your stop loss further away? Why do you close off a position, right, before it hits its take profit? All these things have to do with trading psychology, right? Because the trading strategy doesn't tell you to panic. It's not like, okay, your trade is 90% to your stop loss. Now it's time to panic, guys, right? Hit panic mode and try to push your stop loss further away. The trading strategy mentions nothing of that. Trading strategy assumes that you're very, you're in control of your emotions, right? But that's not always the case, right? That's not always the case, because when you trade, your heart beats faster, you sweat, you panic, you can't sleep at night, you wake up in the middle of night checking your positions. All these different things stems from trading psychology. And today we'll be covering some of the ways and techniques we can use to overcome this, right? So it's super important topic today, right? Revenge trading is one of the big things that you guys talk about, have requested rather, and I'll be sharing you some of my own techniques on how I overcome it. We'll be looking a little bit at setting targets, daily, weekly, and monthly targets. Is it a right thing to do? Is it a wrong thing to do? Right? And lastly, we look at a trading plan, right? Do you have a trading plan? Do you stick to your trading plan? How defined is your trading plan? Right? We'll be looking at some of that. All right. Now, Charlie is asking at the end of my session whether I have time to explain RSI and stochastic. I do not have time, but I can show you a place. I'm going to show you where you can get my recordings on them. All right, guys. Now let me share my screen with you. Okay. So for those of you guys who are requesting, like for our previous webinars, where I want to direct you to is to go to the icmarkets.com website. Okay. You head over to more, and you head over to this part called webinar. Under education, you head down to webinar. When you click on it, oh, it looks like they updated the page, right? You can see my colleague Hao Cheng over there, right? That's me, right? Okay, these are probably the bunch of us doing webinars for IC Markets, right? Scroll down a little bit more, right? And you can see our bunch of upcoming webinars, right? For those of you who listen to Chinese, you can tune in later at 8:30 p.m., right? But what I recommend you to do is to click your language, select English, right? You can see when is the upcoming webinars, right? I have one tomorrow, same time, same place, where we look at the markets together in our live analysis session. Okay, yes, that's right, Omar, live analysis session. If you tune in to last week's analysis session, I think you remember we made a couple of really good calls, right? We made good calls on gold, we made good calls on Bitcoin, right? It'll be an awesome time tomorrow, right? So today, Tuesdays are the theory sessions. Tomorrow is where we dive into the markets and practice it together. Okay, now, if you miss our previous webinars, yes, it's perfect, man. If you miss our previous webinars, right? On the same page, you scroll to the top and you click on previous webinars. Okay, previous webinars, you scroll down, right? And you would be able to see all the different webinars we covered previously. So your question earlier, Charlie, on the stochastic RSI trading strategies, right? Where you can go to is you can go to this page, right? And you can click on view, which will show you the stochastic oscillator, and the RSI trading strategies. Right? I always recommend you guys, if you miss any of the webinars, watch this. IC Markets is really dedicated to recording all these sessions so that you can watch and rewatch them, right? So you missed out anything, if I'm talking too fast, you can tune in there, right, and you can watch it, okay? Now, guys, let's begin the webinar proper. Okay, so once again, introducing your host. For those of you guys who are attending this session for the first time, we're close to almost 200 people here today, right? Just to introduce myself, this is me, Desmond Leong, for your host for today, right? Run the award-winning research firm Average Fortune Group and the Forex Army. Right, so we are finalists for the 2019, 2020, and 2021 Best FX Research and Best Equity Research. Right, so we've got a team of CFA, CMT, and CFT accredited traders. Traditionally, our business revolves around advising banks and brokers where the markets are heading, but we have a special partnership with IC Markets where we teach you how. Oh wow, that's a very long question, Damon. Right, I will take a look at it in a moment. Okay, yeah. So we have a special partnership with IC Markets. We're going to show you how from an institutional perspective, how to look at the markets, right? Not only from a technical, fundamental point of view, but today, right? Today we'll be showing you from a psychological point of view how you can tackle the markets, right? For those of you guys who want to find me on Instagram, you can head over to Comfy Desmond, right? I do not have any nice posts about Forex trading, Lamborghinis and stuff there. It's a very simple post page where I have mostly posts about my cat, right? So you can tune in there, right? Yeah, if you want to check out more about me, right? And if you want to find out more of our indicators and EAs that we built, head over to the forexarmy.com, right? That's where I'll go wild about creating my own tutorials, indicators, EAs. Again, it's not endorsed by IC Markets, but yeah, it's just a place where I'll go wild creating my own stuff. Okay, now Damon, I see a question. I will get to that question. It's very long. All right, can you summarize it maybe slightly shorter for me? But I'll take a look at questions throughout the webinar. All right, thanks for typing it out. Okay, I believe we will address it kind of throughout the day. IC Markets doesn't offer any trading signals for trading opportunities. You can check their Telegram channel, right? So our team also involves in writing the daily analysis, every day, which we post on Telegram, right? So go check it out, right? We post a lot of nice setups there. So I guess that's the closest it comes to a trading signal. Okay, now without further ado, right? Let's start on trading psychology, right? So what exactly is trading psychology, right? So like I shared earlier, it's trading psychology, something where you sit down, you meditate, and you feel that okay, I'm feeling good today. I'm going to start trading, right? Do you sing, do you hold hands and sing Kumbaya and stuff, right? No. That is not what trading psychology is. Trading psychology is, it's about putting your mind, your mind in a proper state, right? In a proper state to start trading, right? Different people achieve this state through different ways, right? But most importantly, right, it's very for different, it's different strokes for different folks, right? So I'm in this session, I'm not going to teach you about stuff like mindfulness. I'm not going to teach you stuff about, when is the best time to trade, how you can focus on trading, right? There's actually a very good book which I recommend on that, which is called, no, sorry, I saw someone, Francis, try to send a picture. I'll take a look at it later. I'll take a look at that later. But yeah, there's a book called Trading in the Zone, which is really good. Okay, today's session, I'm going to focus on practical tips, right? This is not going to be a 1 hour session where I play some music and we sit down and try and meditate together. Guys, I'm going to give you really practical tips on what I believe has helped me when it comes to trading, especially the psychology aspect of it, because I might have traded for many years. Even some of you guys probably traded more years than me, right? But no one is immune to trading psychology, right? When I have a trade that's going to hit my stop loss, I also I feel the equal amount of anxiety that should I close off my position? I start to second guess myself, right? So okay, Atim, I can see your message. So yeah, just keep sending it through. Nick, the book is written by Mark Douglas, right? I have a screenshot of it later. I'll be showing you. It's by the late Mark Douglas, right? So he has written one of the best books on trading psychology, right? And I've read about 3 or 4 of them so far, right? His is one of the best, right? So yes, Mark Douglas, Francis, that's exactly correct, right? I have a screenshot of it later. I think there are a lot of websites out there that kind of summarize what he has written. But yeah, it's a brilliant book, man. Yeah, that's right, Charlie. It's a brilliant book, right? So today I'll be telling you why is trading psychology so important, right? So trading psychology is important, right? It's not so much that you're gonna punch a screen if you some of you might have punched a screen, right? For me, I slam my keyboard, I slam my table, right? Different, different people have different way of venting their anger. Some people just close their eyes at night, right? And they go to sleep and they hope that, okay, I'm in, like, I have 50% drawdown now, right? I hope I wake up and everything will be okay. Some people, what I used to do, I just used to, drop to the floor and do push-ups and sit-ups, right? But it doesn't help, right? Different people got different way of kind of coping with this kind of pent-up, what's the word for it? Pent-up anger, right? Pent-up anxiety, emotions, right? Whether it's anxiety, whether it's anger, right? Whether it's frustration. There's so many things that goes through our mind when we trade, right? And one of the best way to one of the in a funny way, one of the best way to overcome trading psychology is actually taking a very statistical approach to it, which is covered in this book by Mark Douglas, right, on the right, which is called Trading in the Zone. He talks about how, and you see me use it in many of my other webinars before, right? He talks about taking a very statistical approach to trading. Yeah, I bought new keyboards last week. Oh, Nick, you okay. Really sharp eye, man. Really sharp eye, right? Yeah, I bought new keyboards last week, and no, it's not because I smashed my current keyboard, right? But yeah, the Trading the Zone book, right, gives a very statistical approach to trading. Like everything, if you try to take trading like how the owner of a casino, right? The owner of a casino runs his own casino, right? He doesn't panic. The owner of a casino, he doesn't look at his webcam and he sees like, oh, okay, oh man, this person has taken 5 and has played the roulette table and he made 10 consecutive winning bets in a row. He doesn't panic. He doesn't close down his entire casino, rush down and say, okay, hey, you better stop stop playing here, right? He doesn't let any of the emotions affect him. He sees it from a very statistical perspective, right? So if you think about it, right? Where's my mouse? Okay, my mouse is here, right? If you think about it, right? If, like, for example, the casino, when we play roulette, right? The house has probably a 53% chance of winning versus the gambler who has a 47% chance of winning. The reason for that is maybe because there are 1 or 2 of those, green color, green numbers, 0 and 00 when you're playing roulette. All right. So the house always has this thing called an edge, right? They have a plus 6% chance of winning, right? Sometimes they only have a plus like 3% chance of winning, right? And this is the user, the gambler, that's you and me. Why are casinos, many businesses, they take about 3 or 4 years to break even, right? But a casino business tend to break even in 3/4 of a year, right? They are one of the most profitable businesses out the door, right? And the reason for that is because it's statistically, right, they have a profitable business as long as they don't meddle with the numbers, as long as they don't meddle with the model, right? So they, even though a user might win once, might win twice, might win 3 times, 4 times, 5 times, over this thing called the law of large numbers, let's just say we roll it 100,000 times, right? If someone plays roulette 100,000 times, it will average out to 53,000 times, right? Roughly 53,000 times is won by the house, and the remaining 47,000 times won by the user. But for that to happen, you need the law of large numbers to work in your favor. Okay, let me repeat that once again. For your statistical edge to work out over the long term, right? Some of your trading strategies have a 2% edge over the market. Some of you guys have a 5% edge over the market. Our trading strategy is that if you follow every single thing I've taught you, right, you know, I would say you give yourself a good 20% edge or 30% edge over the market. For it to work, you need to use the law of large numbers. What do I mean by that? Right? So you can imagine the house here, right? The house has a 53% chance of winning, and the user has a 47% chance of winning. However, if right, if all the if the house has a very limited capital, right? Imagine that this casino only starts with $100. It only has $100 in their bank, right? And I know it just takes one mid-sized gambler to come in, and he bets $100. He goes in and he bets $100, and he has a 43% chance, a 47% chance of winning. He wins once, the house is bankrupt, the casino closes down, right? So that is a problem when it comes to capital, right? It's the same thing with it's the same thing as us traders. If we open a trading account with $100, right, and we hope to we hope to trade the market, we don't have enough capital for the strategy to work out over a lot of such numbers. You should minimally be able to take in an extreme case, right? In an extreme case. Okay, wait, Michael, I think this, I just want to check everyone is able to hear me properly. Okay, awesome stuff, right? So I lost my train of thoughts. So yeah, it's about capital, right? If you only have $100 in an account, how are you going to it only takes a couple of serious losses before you're blown out, before your account is blown up, and you're out of the game of trading. It's the same thing as a casino. Okay, so first is capital, second is risk allocation, right? So if you have a trading strategy, right, if you have a trading strategy and it's a decent chance, it's a decent chance of being profitable. Okay, if you risk 30% on each one of your trade, right? If you risk 30% on each one of your trade, oh, good heavens, my handwriting is terrible. If you risk 30% on each one of your trade, you might have a 60% chance of winning, but all it takes is 3 consecutive trades to be losing, and you're out of the game. Even if your first trade is a losing trade, it hampers you a lot, right? You suddenly need to make 30% back, right? So it's not only about the amount of capital you have, right? It's also equally important about proper risk allocation. So if you guys have went through my trade management webinar, my advanced trade management webinar, right, we always talk about proper risk allocation, right? Try to risk within 1 to 3% on each trade. It's not about binary, whether it's 0 or 1, yes and no, but the nicer the setup, the more you can risk on a trade. Okay, if the setup is perfect, the stars are stars has aligned, everything looks perfect, right? All 5 conditions are met, by all means, risk more on the trade, 5% on the trade even, right? I showed you guys the roulette table in the past, roulette table where the traditional roulette table where there's just you about have a 50% chance of winning, and I show you a modified roulette table where you have a 90% chance of winning. Many of you guys do agree that once you have a roulette table where you have a 90% chance of winning, you allocate more to the trade. You'll be foolish not to risk more on the trade, right? When you have a very, very high chance of winning. Okay, so yeah, it's about risk allocation, it's about capital, right? I have a question coming in from Christopher. If you trade $100 account and only risk 50% per trade, is same preset? Yes, okay, Christopher, that's exactly correct. I think IC Markets does have a couple of accounts, not only the standard accounts, the mini accounts, the micro accounts. So yes, if you have a $100 account and you risk 50 cents or $1 per trade, that is still actually proper risk management. You risk $1 per trade, that's still 1%, right? Personally, for me, I always recommend that it is better to start off with $100 live account than to trade with $100,000 demo account. Now, why is that the case? Because with $100,000 demo account, you do not feel the concept of fear of loss, right? You don't panic when you see your position losing, right? You see, you think that, oh, I blew up like 10% of my account. You just reset it and you go back, right? But with $100 account, even if you're losing $1 or $2 or $3, you feel it, right? So personally, the first lesson I want to teach you guys today is when it comes to trading psychology, right? A lot of people say, yeah, I've been trading so profitably, right, on the demo account, but the moment I transit to a live account, right, I suddenly make a lot of losses. And why does that happen? Right, that happens because of trading psychology. Your trading strategy is the same, the trading broker conditions are the same, but you're losing money is because from a psychological point of view, suddenly you're wrestling with fear of loss, a lot of it's fear of loss, revenge trading, trading anxiety. You close out your profits early, you let your losses run, all this stuff, right? Okay, fear and pain, that's correct. Sidan is asking, for that amount, depending on your account size, $100, $1,000, but traditionally you try to risk 1% per trade. So if you're $100, anywhere from 1 to 3% is good, depending on how nice the setup is. Omar, oh yeah. So for you guys who have audio problems, I wanted to give you instructions. Then I realized that you won't be able to hear me anyway. So I'm just going to type it out here. This is a very good, check this out. Check this out. For those of you guys who have problems hearing me, okay? Okay, now let us continue. Yes, emotions is real when you're trading a live account. Okay, guys. Now, revenge trading and how to overcome it. Okay. So the first thing, I realized I put the animations wrongly here. Right. Okay. So the first thing when it comes to revenge trading, right? The first thing when it comes to revenge trading is that I have this very practical advice, which is called 3 strikes you're out. Right? And I mean 3 consecutive strikes, meaning that if you take a trade, you lost. You take a second trade, you lose, and you take a third trade, you lose. Even though your trading strategy might be good, what I recommend is that stop trading. Okay, 3 strikes you're out. The market is not in sync with you today. Your strategy, it just isn't taking off to a good start, right? And the danger of this is that for the rest of the day, that 3 losses will be on your mind. You're going to think of ways to try to make back that 3 losses. Okay. Yeah. So dopamine makes us retards. Yes, exactly correct, Andre. Right. So yeah, it's the concept of losing. It's not a hard and fast rule, but I stick to this rule, right? I mean, I have bad days myself, right? I take 3 consecutive losing trade. I'm like, screw it. I mean, yeah, screw it, right? So the markets are not agreeing with me today, right? I'm just gonna stop trading, right? Meaning that I close my charts. I even close MT4. I'm like, okay, forget it. Of course, close your pending positions, so that you don't wake up and you realize that next day you have another 10 losses, right? After the do you recommend to come back? Yes, I usually come back the next day, Julio, right? So I will close my trades for a day. I'll close my trading terminal and I'll come back the next day, refresh. All right. So important thing to do is not to stare at your computer when it comes to revenge trading. Okay, and there are a lot of things that actually lead to revenge trading, which we might not even realize it ourselves. And I'll be touching on that in the next slide, right? Jay, there will be a time for us. Okay, there might not be a time for more specific questions. Just try to send them through. Like I said, I'm kind of looking at it on the side. Joa, right? So you're saying Joa posed a very good question. Shouldn't a strategy be robust enough that there is no room for subjectivity and thus canceling out emotions? Yes and no, right? So that is the part where I talk about a trading plan, right? So usually trading psychology, right, is a robot doesn't have trading psychology. A robot has no emotions, I mean, right? So a robot kind of trades by itself. Like, yeah, whether it's suffering losses, it doesn't care because it works based on algorithms. If we can function like this, that'll be great, right? If we can function like this, that'll be awesome. But we're humans and we can't, right? In fact, I think it was Mark Douglas himself that mentioned, right? We humans are designed to be the worst traders, okay? The worst traders. If you trace back all the time to when we were, ouch, I mean, we were cavemen. We naturally have an inbuilt fear of loss of our lives, right? And that kept us alive. We see something rustle in the bushes. We're like, okay, probably a saber-toothed tiger gonna kill me and stuff. I better stay safe. I better be very careful, right? Because any mistake, any misstep, right, might cause you to lose your life, right? So this very shit, I mean, I forgot the word. This very fact that we have fear of loss is actually not a bad thing. It's helped us in evolution, right? Imagine if we had no fear of loss, right? Every time we see something rustling in the bushes, we're like, oh yeah, let's go make a friend with that thing, right? And we go over, and before I know it, we're a meal for a saber-toothed tiger or something, right? But this fear of loss has kept us alive. And when it comes to trading, as much as we try to cut it out of our lives, right? Joa, I'm sure you have tried it before. I've gave you many good trading strategies, the guidelines, the check boxes that you need to tick before you trade, right? You still have that. You have to admit that you still feel the emotion, right? I have my own criteria when it comes to trading, right? But even then, you will still feel that emotion, right? We can try our best to cut it out, and I'll be sharing with you how I can do it later, right? I do see. Okay, I'm losing track of the questions. Uh, um, so okay, Jean actually asked, yeah, if you scalp for a living, how do you do it? The feeling of need to make money, right? So I guess your question is, if you trade for a living, how do you deal with this feeling that, okay, if I don't trade profitably, I'm not gonna have food to eat today, right? That is a mistake, right? So that's actually a very good question. Firstly, it's important that you don't attach too much. Okay, like I know it's a bit obvious, right? But yeah, don't attach too much emotions to trading, right? But you do not quantify your trades, meaning that if I made a trade and I lose $100, I won't think, oh man, there goes my dinner, right? I'm not going to eat dinner tonight, my family's going to starve, right? It should not be that case. Do not try to quantify things, right? And how you can not quantify is by not being reliant on trading as a sole source of income, right? It should be a bonus income, right? It can, why I'm saying that is, unless you have such a huge capital where making 0.1% for a day is okay, right? The moment you realize that you are trading for a living, your emotions are amplified, because the antithesis of that is that if you trade for a living, right, that means if you don't trade well, you won't be living, right? If you really think about that. So think about it, right? When you if you're worrying that being unprofitable is gonna cause you to not be able to put food on the table, I'd say it's pretty dangerous, right? You need to reassess your priorities, right? Do not risk trading should be used with your spare income. Be used for your spare income unless you have, you're managing other people's money and it comes in with fund management fees, profit sharing, right? Trading, you should always take a cautious approach to trading, especially us retail traders. We don't, yeah, us retail traders, we trade with what we can afford to lose. Okay, we trade what we can afford to lose. Why don't we trade with robots then? We can, if you have enough, if you can code your strategy into robot, that's great, right? That's actually honestly a really, really good way to do it. Yeah, in the future, right? Yeah, computers will take over and we trade against them. Jay is mentioning that my big issue is fear of loss. All right. Yep, fear of loss, too much pressure, you need a good coach in the bank. But when you are a good trader, everything you hurts, is it? So many questions. Okay, let's see, in about 6 months savings. That is exactly correct, right? Sorry, wrong email. Okay, I'm seeing a lot of questions come through. I'm seeing a lot of questions come through, right? And what I want to share with you guys, right, is that let me get to them one by one, right? Dopamine, megas. Okay, sorry, I got so many questions coming through, right? Let me try answer them one by one, right? Keep sending the questions through, right? Okay, I'll be addressing your question on fear of loss, right? Because technically, remember my trading, remember my webinar on advanced trade management. Okay, on advanced trade management, trading, the problem you have with fear of loss, right? The problem many people have with fear of loss is because you have an entry, you have a stop loss, and you have a take profit. Okay, you have an entry, stop loss, and take profit. So when price is in between here, right? When price is fluctuating in between here, right? You are, the reason why you have fear of loss is because you don't have a plan, right? You're just hoping, oh man, I hope that price continues to go all the way up to hit my take profit, right? Or I hope, that is usually the case when it comes to fear of loss, right? You're just holding out and hoping that, price hits your take profit. However, right, like I shared with you previously, in a trading strategy, it's not about entry, stop loss, and take profit. Entry, stop loss, take profit. There's a price where I put break even. There's a price where I take profit one. There's a price where I put take profit two. There might be a price where I put trading stop loss. There might be a price where I put take profit three, right? There's a price where you put idea and validation. There's a price where I put cancel trade. So in between your trade, all the way from is entry to either is take profit or is stop loss, you have a plan put in place, right? You know that at this level, something will kick in, your break even is hit. At this level, another thing kicks in, your partial profit is hit, right? Another level kick in, your trading stop is hit, right? And maybe a second take profit is hit, or maybe it goes against you. There's a place where it kicks in, idea and validation is hit. All these things, right? You have a plan in place, right? You put the plan in, you let it work, right? You put the plan in, you let it work. But if the plan is empty, that is where you panic. You're like, did I plan for break even? Did I plan what would happen if price went 90% in my favor, right? Your fear of loss is driven by lack of planning. Because if I told you that price would definitely hit your take profit, I came back from the future and told you that, okay, price is hitting here, right? And you see your trade slowly going up, you would not panic, right? You'd be like, yeah, I know how the plan is going to be, and I have no reason to panic. The reason why that you panic, why there's a fear of loss, is because you do not know what to do, right? You don't have a plan. It's like you're going to war without a plan, or you're going on stage and giving a speech without having a speech, without having a script, right? If you don't have a plan, that's why you panic, right? So always have a plan when it comes to trading, right? Okay, let's continue to see questions come through. Yeah, following your plan. Fear is bad for trading. Fear is bad for trading. Dennis is saying my fear is not being right. Right, my biggest fear is not loss, it's not being right. So it's not, you have to understand that when it's not about not being right, but whether you should be afraid if your trading strategy does not have a statistical edge over the market. Meaning that if your trading strategy is terrible, you only have a 10% chance of winning, and you have a 1-to-1 risk to reward, right? It will be terrible if you're not afraid of that, okay? And you go in thinking, yeah, I'm gonna go and I'm gonna trade, I'm fearless, I got a heart of steel, right? I'm gonna start trading, right? That is where you should be worried, right? So you should, so Dennis, it's important to be afraid that your trading strategy is not statistically profitable. However, when it comes to individual trades, what you need to look at it is in the form of a probability, right? If you know, the only way to overcome that is that if you know, and you know that you do manual backtesting, or you do like backtesting with MT4, backtesting with MT5, you know that testing your strategy over the past 100 setups, that 70% of the time you're profitable, right? You need to trust in the process, and that is what I'm going to talk to you about later, right? We're going to trust in the process. Okay. Nice shirt, right? Thank you. Oh, thank you. Right, it's one of the rare times I actually like legit wearing a shirt. Most of the time I'm wearing my super dry shirt, right? Right. I do want to focus. Nuno, I'll kind of check a little bit on what you just sent over. All right. Um, I have not used robots successfully, right? I am trying to create a robot. The day I successfully create one, I'll let you know, right? Thank you, thank you. Right, thank you, Andre. Now, setting daily and weekly targets. How many of you guys set daily and weekly targets when it comes to trading? Any of you guys? Daily? No. Me? Yes, yes, no, yes. Yemi has a weekly target. Ray, no. Elkie, yes, yes. 1% a day. Yeah, how much do you guys set? You know, how much do you set your, what's your target for the day? What's your target for the week? 3 to 5%. I like the answer, Fabio, right? Andre, okay. Okay, nice answer. 10% by Francis, 10% a day. Wow. $5,000 a week by Junai, right? Don't have a target, 3 to 5% week, 3%, 2% weekly. That answer Simon, right? Okay, guys. Now, a lot of people, these are a lot of answers, right? How much, 3% a day, 10% a week, 15% a month, $5,000, 6% a month by Graham, right? Now, Joey, 100 pips a week, that's my goal, all right? 5 trips per day and 15% per month. Now, guys, this is all about setting targets, right? And this is the first mistake. Never, ever set a target. Never, ever set a target. And this is something I learned the hard way too, because I know it's very counterintuitive. It's very contrary to what many people say. Yeah, wait, what? Right, Omar, what? It's counterintuitive to what people say. And this is the problem, right? Imagine this, right? It is 11 p.m., right? Imagine if you have a target of 100 pips. Where's my mouse again, right? You have a target of 100 pips a day. It is 11 p.m. and you've made 90 pips for the day, right? And you're about to go to sleep and you're like, hey, guys, I'm almost at my target. I just need another 10 more pips, right? And what you start to do, you start to look at the, start to stare at the charts. Usually throughout the day, right? Yeah, usually throughout the day, you do not even look at, you look at the markets. If there's a nice setup, you take it. You're making money, right? And suddenly, right, because you have 10 more pips to hit for the rest of the day, right? You start staring at the chart. You're like, I need to make the last 10 pips. If not, I'm not going to hit my target. You start staring at the charts and you start seeing patterns. You start seeing stars. I'm not talking about a shooting star or evening star formation. I mean, you literally start seeing stars because you're staring at the market where the charts are so long, right? And you start changing your time frame. I'm using the 1 hour chart. Maybe I can look at the 4 hour chart. Maybe I can look at the 30-minute chart, right? You kind of play around with it, right? Maybe I can throw in this indicator. This pattern looks okay, right? So you start trying to look. Yeah, sounds like a big on drugs. Is right. Yeah, you start compromising on your trading decision. So you start taking trades that are not optimal for you, and suddenly you go to 80 pips for the day. Take a trade, you lose 10 pips, and you're like, holy cow, right? I am now 20 pips away, right? I can't believe it. The market has wronged me. I'm going to start at least making back 90 pips, right? You start looking for trades where it didn't even exist in the first place. You start to compromise more. You're driven by emotions, right? You start to lose 30 pips, and now you're at 50 pips for the day. You can't believe it. You're like, there is no justice in this world. Yes, that's right, Nick. That's where revenge trading starts. You might have started off profitably. You're still in profit, but you're gonna chase it. You're gonna hunt it down because you feel that you were at 90 pips already. I can make it back there. I have 50 pips to spare, right? I'm up 50 pips for the day, and you start trading, and before you know it, right, you are at negative 10 pips for the day. And that is where, depending whether you got someone to kick in the door and say go to sleep, or or you can even go to sleep, you're like, damn it, man, trading is not for me, right? And that's how revenge trading begins, right? If you're able to catch it there, that's great. If you don't even catch it, it might go out to blowing up your account. This is just an idea. Where did it start? you are going from 90 pips to 100 pips. If the market, let's just say, guys, if you have if your target is 100 pips for the week, it's a Friday night and suddenly out of nowhere the market's closed, you have 90 pips for the week, right? Do you try to trade during the weekends where the markets are not moving? Do you open the chart and you're like, okay, you bang on IC market table, it's like, hey, I want to trade, guys, can you open the markets because I want to trade? No one does that, right? Because the markets are not moving. And that's the same thing when it comes to trading. If the markets are not moving, if the markets are not moving in your favor, if the market's not giving you something to trade, then don't trade. It's almost as if you're trying to trade during the weekends when the market's not moving, right? Remember, it's not just about markets moving, it's about the markets moving in your favor. The market is moving to give you something to trade, right? All right, Christopher, I'm glad you have learned that lesson. Right, and that's true, John, right? John says that he's been trading for years without trading for years. What is it? No, Michael says that trading 4 years profitably without any targets, and that is the trick. That's a great thing, Michael, right? You don't need targets to trade profitably. Don't set this unrealistic expectation. So every one of you guys who said you have a target for the day, a target for the week, I say it's good to have an aim, but don't have a target. Don't have a fixed target. It's great if I hit it, right? I mean, if we hit 3% for the day and there are so many trading opportunities staring at you in the face, by all means, go and trade them, right? Imagine, right? Imagine you made 3% and there's like all the best setups are in your face. You're looking at it, I'm like, oh man, I've hit my target. I better not trade because I made my 100 pips on the day and it's only 1 p.m., right? So yeah, just keep trading if the market gives you that. If the market doesn't give you anything, don't trade. Okay, that's right. Now, next question: do you have a trading plan? Right, most of you guys have one, but how specific is it? Right, and that's where it is important to have a trading plan. This is not a trick question, guys. It's important to have a trading plan, right? And I want to share with you that I want to share with you this point. Trader A, let's see if I can draw it out over here. Trader A, Trader B, right? Both of them have 3 criteria to trade before. Their trading plan has 3 criteria. Trader A and Trader B, okay? Only if there are 3 criteria, then they'll trade, okay? Trader A has 1, 2, 3 criteria. He took a trade and he lost 5% of his account. Trader B has 1 criteria, 2 criteria. He take a trade and he has made like 10% on his account. Which trader is the better trader? The Trader B who used his intuition, or Trader A who stuck to his rule and still end up losing 5%? Now we got a lot of you guys saying A. Got Ray who says it's B because intuition is important. Sally saying B. We got a couple say A. Trader A in the long term, right? Majority of you got a bit of both by Mike. B deviated from the plan. Trust in our plan. B make good job, but A is a trader. That is right, Joa. Right? It's not a run, it's a marathon. I love you guys, right? You guys are answering exactly how I answer it. This is the thing. Be committed to the process without being emotionally attached to the results. And that's what it means to be a good trader. Take 3 trades. If I lose the trade, I'm like, hey, okay, at least I stuck to my trading plan because I know that if I stick to my process, right, I will be profitable. It's just a matter of time. It's all probability. I always have a 30% chance of losing. I don't expect to be profitable all the time, but yeah, that's the case, right? But you need to be committed to the process. And you don't get attached to the results. If I lose 5%, that's fine. I lose 3%, that's fine. I don't want to start second guessing myself using intuition, right? Because your intuition, you trying to feel the markets and trade based on hunch, that is what affects your trading probability. Okay, so yes, Trader A is a better trader. Okay, guys. So always keep calm and stick to the rules. That is what I want to say to you guys, right? Create a trading strategy of checkboxes. And what I want to tell you guys to do, right, is that you have a trading strategy of checkboxes. You have the required ones and you have the bonus ones. What I mean by that is that you have required checkboxes that must be met before you take a trade, right? So 1, 2, 3 are taken, then you risk maybe like 1% on your trade. Okay, 1% on your trade. And you have the bonus ones, right? If any of these bonus ones are checked off, then you can risk more on your trade. So maybe if you one check, you can plus 0.5%, right? You have 2 checked, you can plus 1%, and you have 3 checked, you can plus 2%, right? So this is what trading strategy should be about, right? Check boxes. Just keep checking them. Okay, nice, nice, nice. The more it is, the more you can trade, right? Compounded trade. I'm not sure why you compound, but not so much a compound, but rather have higher risk allocations to it. Yeah, double the trade. You can even double the trade, depending on how nice it is, right? But if you start small at 1%, doubling up to 2% is okay. But if you start off at 3% and you double up to 6%, that's a little bit risky, guys. Okay. I know there's a question much early on, right? There was a question much early on which I want to get back to. There was a super long question. Let me just find it. Okay, okay, sorry. Okay, well, quick. Okay, Damien has left. No worries. I'll get to that next time. Right. Okay, guys. Well, today's session was chill. I just want to check with you guys if this is a kind of session that you like. Trading psychology. If you want me to touch a little bit more on it, if you want to create a trading plan for you guys, I can do it too. When it's Jean is asking, when do you decide to withdraw your profits through your capital? What I recommend you to do is whenever you have profits, just withdraw bits of it, enough of it to buy yourself a meal, buy your family a meal. Because sometimes profits are there and you don't feel it. Maybe if you make $50 of profit, withdraw that $50 and buy your family that meal. Whether it's a McDonald's upsize Happy Meal, whatever meal it is, you just buy it. And when they're eating it, you let them know this was made from my trading profits. I bought this with my trading profits. You can feel it, you can taste it, you can smell it, right? Yeah, treat yourself, right? Bits and pieces of it, right? So it might start off with a Happy Meal. Over time, it might be a steak. Right? After a while, it can be bring everyone to the water park, right? Bits and pieces of it, right? Don't just try to let it compound forever and don't ever take any returns, right? Anytime you make profits, withdraw. Make profits, withdraw, right? Reward yourself. Okay. Julia is asking if next 2 months there will be volatility. Trust me, right? Um, right. Yeah. It's a little bit basic, Adam, but yeah, I thought this foundation was good for us to touch on. Okay, Bola, that's good. You're withdrawing your profits right now. You prefer my strategy? That's great, Stephanie. Right. I'll share with you guys a little bit more about it. I will try to create a trading plan. I haven't shared with you guys one. Maybe on the next webinars I can share like how to create a trading plan for you guys. Right. We'll create one awesome one together. Right. Yeah. Trading psychology is exhausting, but it's important, guys. It's important. Right. Good session. Thanks. Charlie, I'm not sure. I need to see what's covered for next session's webinar. I don't think it's on trading psychology again. Oh, hey, Damien, you're here. Oh, shucks, man. I was wondering where you were, right? So I was wondering why you left. I think you got a question, right? Saying big shoes that will be. Let me just give me 10 seconds to read this. Damien is saying that when it comes to trading, he can never he tends to second guess himself when it comes to getting the right entry. Now the problem you are second guessing yourself when it comes to right entry is because you do not your boxes are not clear enough. Your check boxes are not clear enough. You might have a few check boxes there, but your definitions of what goes into the box is not clear, right? Your definition could be something like wait for confirmation, and you start to think what is confirmation, or maybe wait for bullish momentum. You start to question yourself, what is bullish momentum? You need very clear definitions so you don't second guess yourself, right? Because trust me, no one can pick the perfect entry point. Well, maybe I can to a certain level, but no one can pick the perfect entry point every time. Okay, yeah, you know, it's not about like sniping it on the dot, right? Okay, but yeah, it's not about sniping it on the dot every single time, right? You're bound to get in with a degree of accuracy, whether you're slightly right or slightly wrong. Okay, because if you were able to pick the, you know, you need to let go of the thought that you can pick a trade once, you know, once the criteria is met, the market will obey you, because you can have 10 criteria all checked off, right? And like the stars that I've aligned, I've consulted Guru, I've meditated, you know, I've connected with the universe. I think, you know, now's the perfect time to trade. But the market can still stop you out, because the market doesn't care what you think. The market can stay, wrong more than you can stay liquid. So always be careful about that. Don't be over committed, giving yourself too much pressure that you have to get it right every single time, right? I hope that answers your question. Okay. Okay, guys. Oh, so many questions coming through. Yeah, you know, to be perfect all the time. What examples to put in the boxes, right? Some examples to put in the boxes. The clearer it is, the more actionable it is, the better. Like for example, when it comes to my trading strategy, my first checkbox is there a Fibonacci retracement? Is there a Fibonacci extension? Is there a pullback support? You know, is there correlation, right? Is it above the Ichimoku cloud, right? So it's very, very clear. It's black and white, yes or no. There's no such thing as a maybe, right? There's no such thing. It's super clear. Okay. Um, so yeah. My routine on a daily basis, you can search up day in the life of a trader, Desmond Leong, and you can see what's my daily routine like. There's a video created on me there. It's quite fun. Yeah. All right. Sida is asking what book I recommend. Trading in the Zone, definitely. Okay. Now, guys, it's been an awesome session. What I want to recommend you guys to do, right, and make sure you do not forget. Okay, and go to the upcoming webinars. I'm going to send it in the chat over there. Go to upcoming webinars, and I want to see you guys there for the live analysis session tomorrow. We'll be looking at the markets together. We'll be drilling in the markets. I'll be touching on my trading plan a bit, show you how I go through my trading criteria. Those two of you guys who attended my webinar last week, right? I think I was sharing. Let me see if I have some of the setups that were. I think I saw the setups that I shared. If I can just, yep, some of the setups for IC markets, right? We had a really good setup for dollar CAD, right? That it bounced up exactly to where we're looking for, right? We were calling the scalping setup on Kiwi Franc. It reversed super nicely, right? And then we're calling the, you know, the trend line break double top reversal on gold. And I believe you've seen it reach plummet to the 1800 level, right? So we got some really nice, our live analysis session is always super exciting, guys. Okay. Yeah, it's awesome video. Thank you, Nick. Now, is there a Telegram channel? Yes, a Telegram channel for IC markets. We kind of send our analysis in here and there, but it's slightly different, right? It's slightly different from the daily and weekly analysis sessions that I do, but just do check it out, okay? Saida, I will help you check on the webinars. I send them multiple messages, so they should be uploading it soon, hopefully. Okay, but yeah, guys, that's it for me. What I want to do, if you can just help me once again, I'm going to just run a quick webinar, run a quick poll. Let me know how you found today's webinar. Let me know how you found my shirt today. Kidding, right? But whether it's helpful or not, you know, whether you want more sessions like this, I'll try to do my best to kind of take care of you guys well, right? Because after all, I'm trying my best to guide you all to be better traders. Give me your feedback on how I can improve too. Right, we've been at this for I think half a year already, and I've enjoyed doing webinars with you guys. A lot of familiar names, a lot of familiar faces, right? So thank you. So thank you, right? Thank you very much. It's nice to see that about 97% of you guys have rated this above 4 and 5 stars. Thank you. If you rate it 3 stars, let me know too, right? Don't worry, I won't hunt you down, right? But let me know why you think it is and how I can improve. Okay. Thank you very much, guys. How to give feedback? You just need you just need to type it through here. I can just look at it. All right. Thank you very much once again, guys. Right. I will see you guys not next week, tomorrow, right? for our live analysis session. Tune in with me as we take on the markets together. Okay, now stay safe, trade safe, and peace out. Okay, see you guys, and follow my cat on Instagram. Okay, guys, see you guys, man. Bye bye.